Hello, this is John Piper with the weekend video clip, and it's Saturday the 7th of May. I mentioned in a recent report that my biggest position is gold, so I thought maybe I'll start with gold today. I've been suggesting that we're going up here. It's possible in fact that we have seen a complete 5 to here, a 1, 2 here, and this could be actually a 4. It's subnormal for a wave 2 correction, certainly. Followed by a 1, 2, 1, 2, maybe 3, 4. It could be we're going to see a bit of backing and filling at the moment. I mean, there's certainly, I think, far too many people saying gold is in a new bull market. I think it may be that we've seen the gains for the time being, and that we're going to see a bigger correction, possibly retesting around 1200 again. So I'm a little bit cautious here. On the other hand, I don't plan to divest myself of my core positions, which remain spread across most gold vehicles I'm aware of. I think pretty all gold vehicles I'm aware of. I'm certainly spread betting gold, and that's the one I jump in and out of from time to time, so I may be looking to take some profits at the moment. I've got various ETFs, GDX, gold miners, etc., physical gold. I don't consider myself to be an expert in these things. I'm happy to discuss them with people, but I certainly am not an expert in ETFs or indeed stocks. I mean, I have various gold stocks, some of which, like Norseman Gold, seem to have gone to zero for some reason. Haven't had time to fully research it really, but again, I'm not an expert in these things, but some of the stocks done incredibly well. I mean, Silver Wheaton, for example, is one that I picked up from I think the guy who wrote The Big Drop, and that's almost doubled in a few months. Some other stocks done very well. GDX is doing very well. So I'm very happy to discuss these things, but it's not something I consider myself to be an expert in. But certainly, if you're interested in gold, then the stocks and the ETFs are things you shouldn't ignore. And I continue to look here for a substantial bull market. Seems to be no reason. Well, I mean, obviously one never can be sure about these things, but in my view, I think there's a good case that we're going to see a substantial bull market in gold and silver, in fact. So right now, I'm not sure that we're going to see too much to the upside in the medium term, but I expect it to be explosive in the longer term. Right, this is the daily chart of silver. That was a daily chart of gold I was showing you a minute ago, and the low came in here. We seem to have 5 waves up. 1, 2, 3, 4, 5. ABC correction of $16, and this looks like a clear third wave. So the case for more upside on silver is more positive. However, having seen this strong thrust up, which looks like it could be a third wave, we could see a fourth wave correction, then a fifth wave. But again, the really fast action could be behind us here. It may not be. I mean, again, I'm retaining my silver stocks. I actually also have a gold miners, silver miners on ETF on IG, and I say silver Wheaton is doing well. So this looks more positive. So we could see a fifth wave if it was as big as this fifth wave. Sorry, as the first wave, which was 250 or thereabouts. It could still take us above 20, in fact. So I think there's more of a case here for upside than on gold in this shorter to medium term. Longer term, bit of a pullback maybe. The short term doesn't actually interest me too much. It's really the medium and longer term I'm going for here. I ignore the shorter blips as much as possible. Right, my second biggest position is in the VIX. You can see the VIX traces along. Where is this? This is quite a long-term chart, going back to 1990s, and you get these blips up to around 50 quite frequently, not that often, but they do happen. And obviously, the reason I'm buying the VIX at the moment is because I think that we may be due some kind of fairly dramatic move in the foreseeable future, meaning in the next few months. The downside is that if you buy, I think IG are currently about the 18 level, 17, 18, that they can go down to 10. So obviously that's quite a big fall, and there is a carry cost as rollover. You tend to have to pay more each time you roll over, so that can be expensive. But as long as you get one of these big blips up within the time frame, within a reasonable time frame, then it's a good trade, and that is the downside. So I have a fairly large position in the VIX, ETFs and spread betting, looking for one of these blips up. as a bear market comes in stocks, which is what I'm expecting to happen over coming months. I think it's already started. It's just a matter of when we see acceleration. Right, and also that my third biggest position is in selling index options, particularly the DAX. So this is a daily chart again. Peak came in over a year ago now, April 2015. A, B, C, B, and then a 5-part C wave, so a big ABC, and so far what looks like an A, B, C, which has now turned over. So that's big B, as it were. That's big A, the lower big A, and this is possibly a big C decline coming in, which could be fairly devastating. So let's have a look at it in more detail. A pretty messy pattern, really. Looks like an A, B, C, then kind of B wave here, followed by a C, then a B, another A, B, then possibly 5 waves down, a C wave, so a bit of a bounce coming in. I mean, this could just be a corrective move. I mean, this action into here doesn't look very impulsive, but it's possible we've seen this could be a complete ABC correction. So all a bit dithery, really. Taking a few profits down here on the index options, left most of them in place at the moment. So it depends what happens next, but I'm expecting this to be a corrective bounce at the time being. How to see how that develops next week. By the way, I'm planning a seminar on selling index options, probably include VIX and spotting major bull market developing, like I believe we're seeing in gold and silver. I need to ask Dave Booth to speak on ITR as well. So a fairly action-packed day, probably, well, had to be later this year, obviously, possibly sort of the autumn. But if people are quite keen, because I mean the market could start moving quite fast, quite quickly, so I could be encouraged to bring that date forward if people are interested in trading bear market action and catching this gold trend in stocks, etc. Okay, FTSE, a similar kind of pattern to the DAX, really. So ABC down there, ABC to there, C wave, quite a confused pattern, followed by an A, B, C, and then this new decline that's come in. So let's have a look at that. Right, FTSE has a clearer 5-wave decline down to there, rather messy A, B, maybe C to there. I think this could be an erroneous tick, in fact. So that could be a 4, 5, possible 3 maybe down to there. So that actually could count as a 5-wave decline down to there, which could make it 3. So 1 to there, 2 to here, 3 down to there, and this could be a 4th wave, maybe like that, followed by 5th wave decline. So it could be got a bit more downside here after a bit more upside, but again, it could be that the faster action is behind us. We're now into the expiry period, and the 2 weeks into expiry tend to quieten down a bit. So that may be what we see over the next couple of weeks with a slightly downward bias. Right, the Dow presents a somewhat different pattern with a fairly, well, looks more like an ABC flat really down to there. A, B, C, and then again this fairly small decline, which in the longer term doesn't actually have much impact. Let's have a look in the shorter. I started off quite well with a 1, 2, 3 to there, 4, 5, A, B, C. That set the scene for a break, a 3rd wave decline coming in. What we've seen is pretty dithery, really, in the event. That could be a 1, 2, okay, 3. I thought you have got this 4 wave. It did overlap the 1st wave, so it doesn't actually encourage us. I mean, you count that as a 1, A, B, C, 2. So this would have been a 3rd wave, but it's just not the kind of stuff that 3rd waves are made of. So looking more corrective, really, with a fairly decent rally coming in on Friday. Go down a little. This looks fairly positive, really. That's a 1 wave. It counts as 5. In fact, 1, 2, 3, 4, 5, 2, 1, 2, 1, 2, 3, 4, 5. So right now it could be a complete ABC, A, B, and C, or it depends what happens next. We see a bit of a pullback, ABC. That could just be a 4th wave and then another 5th wave. But again, it looks like a bit of up and down action early next week. Maybe a peak up here somewhere, followed by a correction. So again, we could see quieter action into expiry. Right, finally look at China. Right, I'm talking about this triangle here. and possible peak here. 1, 2, 3, 4, 5. Because of the form of this wave, it can be an ABC because the leg here is the same length really as the leg here, so ABC count also valid. Breakups are up to the upside of the triangle, but that was a false breakout. We failed. I had a stop at 30.33. Prices are somewhat different from IG, but on IG I was triggered short. I'm staying with that short for the time being. I wasn't too happy about the weekend, but I think there's a lot of potential here, so I wasn't too concerned. My stop is fairly tight, so any loss will be contained. So right now I'm short of China, as per the reports. I've been talking about having extreme swap there for some time, and just depends what happens next. But there's certainly a case, having broken below the triangle, that we could see this market decline. And there is this 5 waves, egg triangular sort of BC to there, and possible new impulsive action. So if we see China fall back, needn't be dramatic, of course, but that could well feed through into other markets. Actually, we'll just look at the Nikkei quickly. This is quite an interesting chart. Looks like 5 waves down to there, B wave, then a very clear 5-wave decline down to there. Counts as an ABC though, so it doesn't matter how you count this first move, A, B, C. But another ABC, suggesting that is a B wave with a C wave decline now coming in. So let's have a look at the pattern. The pattern here is also suggestive of not too much happening in the next. So we've got a 1, ABC 2, 3 down to there. Now we've got this sideways drift, which could be a 4th wave. A bit of a false break there, followed by a possible 1, 2. So this looks like it might want to go a little bit lower, just to complete 5 waves down. But again, the fast action would be behind us, I would expect, followed by some corrective move up at some point. So again, suggesting a quieter period into expiry, but a corrective rally might be due, but it may not amount to very much, of course. I mean, this market is looking particularly unhappy. And the next leg down could be quite sharp. This whole decline hasn't lasted that long. I mean, down to there was only what 2-3 weeks. In fact, this rally here is suggestive of being the entire correction. It's possible that the 5th wave. Let me just clear this. I mean, it could be that we've got a 1, 2, 3, a very subnormal sort of correction there, followed by the decline down to there, which is almost a 5, not quite actually. Various rules broken there. Very subnormal 3rd wave is a 5. So this could be a 2, just because of the time parameters. That peak there is possibly quite telling, and the market retests this level here and fails again. I would think we're going to go lower more quickly. So that does suggest that there could be something more unpleasant a little closer down the road. Anyway, on that note, I'll call it today. Hope you found it interesting and useful. Back with the report for subscribers on Tuesday morning. Have a great weekend. Thanks for listening, and bye for now.